Despite your disgust for the global economy and the criminality in charge, you are a man who is just full of love. So God bless you there. Hey, buddy, in closing, if we could, how do you see all this unfolding for our friends in the U.S.? I know this year, I mean, we don't have to talk time frames per se, but do you see things getting real ugly real fast, or do you think that some of our friends that are paying attention are going to have time to get the hell out of Dodge? Are they going to need to? I mean, what are your thoughts on the unfolding?
I don't think people are going to get out of town quickly enough. I think they're trapped.
Yeah.
I talk to a lot of people, and I communicate, rather, with a lot of people, and the common response I get is, what would I do for income? My kids are in school. They have friends. Mm-hmm. I have a business here. What would I do for income? And I don't have a good answer for them. I say, if you cannot transfer your business to be online, and I only know one or two who've done that. What they've done is they moved their engineering services online, and they travel, but they have a different base, and it's not easy. Okay, the breakdown is in progress, and what I'm seeing right now is that the major fault lines are in the Treasury bond market and the banking system, and the irony is really choking, ironic, that QE never fixed anything. QE guaranteed the financial breakdown.
Kept the people asleep longer, too.
Well, let's look at why. So the Fed comes in and says, we'll be the buyer of U.S. government debt, and we'll be the buyer of redeemed Wall Street held government debt. In other words, future issuance and past issuance. They'll cover the upcoming deficits for the government that are made into Treasury bonds. They'll cover that. But they'll also cover the 2-year, 5-year, 6-year-old Treasury bonds that Wall Street owns. So what's the result of that? A lot of legitimate buyers said, we don't need to buy anymore. A lot of legitimate investors said, let's get rid of ours. If the government's going to be buying it, then let's just get rid of ours and we can do something useful with our money. Like invest in a business. Okay, so the Fed destroyed the bond market by discouraging active new investors. Wow, that is huge, ironic. What were some of the other effects? Well, you have to look at the 0%. It distorted all the financial markets. It encouraged the emerging market nations to borrow a lot of dollars, and now they're going to default. So the boomerang is that the big U.S. and London and Western European banks are on the hook for between $6 and $9 trillion of bad U.S. dollar debt issued since Lehman. And why has it gone bad? Well, their currencies have fallen. They were told you got no risk here with a near 0% loan to, say, Bangladesh. What about the currency risk?
Right.
So their currency's down 20 and 30 and 40%, and now their loan's up 20 and 30 and 40%. And they're going to default on it because not only that, but the export business is damaged. They're not exporting oil like they used to, or copper and aluminum and other minerals. So the whole commodity structure for their income stream is down. Okay, well, why is it between $6 and $9 trillion for emerging market debt? Well, basically because how do you define an emerging market country?
Right.
I don't know what the list of countries is, but their debt is very well known. They're going to start defaulting. Are they going to do another central bank agreement not to mark to the market on the emerging market debt? Hell no, because they're not American.
Right.
They're going to try to go in there and steal, seize, confiscate their assets. So in that sense, 0% not only brought about destruction of the global economy, but it provided an opportunity for the Western bankers to seize assets like we've seen the demonstration in Greece. Oh, I tell you, it's so broken. You're asking me what should people do? What can people do? They need to bail out of their bank accounts before they're bailed in. They need to bail out of their stock accounts because doesn't it make a lot of sense to sell out to the Fed and Wall Street who are propping up the stock market? Sell it to them and buy what they've been suppressing in price, namely gold and silver. Makes perfect sense. Or, no, I'm sorry, the dumbasses out there would much rather buy what's already high because it's going to go higher. No, the public usually makes the wrong decisions. I'm telling you what the right decision is. You sell your stocks and your bank account CDs and you buy gold and silver because silver's going to rise tenfold. Silver's going to go almost to 200 with relative ease. They're going to have to bring about an equilibrium in supply and demand. What a novel concept!
Shouldn't the market do that, Jim?
Yeah, well, there is no market, and that's why the Chinese are going to take it away and take control and impose new measures for gold and silver that allow its price to rise, and it's going to break a lot of Western banks. I'm hearing that there are a lot of deals in the works right now for the Western nations to abide by a global pact where the dollar will be replaced by a table of gold-backed currencies. Like the one that we hear about the most is the gold-backed RMB, the Chinese currency, the yuan. Okay, that's not going to be the only one. The Russians own maybe as much gold as the Chinese. Both the Russians and the Chinese, they each own 25 to 30,000 tons of gold. They're each ready, willing, and able to create a gold currency. They're not going to be the only ones. The Swiss are going to come up with a gold currency because they have a lot of gold also. It could be leased directly from the Bank for International Settlements in Basel. There are more nations that are going to have precious metal backing. Look for Mexico to have a silver-backed peso. Look for Panama to have a gold and copper-backed currency. Okay, the pact among the community of nations at this big table that I'm hearing about, I've got some contacts. Again, it was who the contact us. He said, Jim, we've been involved with the global collateral accounts. We need to talk to you about some of the developments. And I'm wondering, just a bunch of poppycock or what. So I had a bunch of questions that I asked them. And we're going to talk again. But the pact of what has been negotiated, not completely yet. Not completely. It's still – the U.S. is obstructing everything. They're trying to murder people.
Clearly, they're
spraying. The U.S. Treasury Department is trying to murder people involved with the negotiations. But the pact it calls for a $10,000 gold price and a $250 silver price.
Jim, in the interest, let's say, of this pact, or the Chinese for that matter, is there interest in a freely traded gold and silver price or in a fixed, much higher gold and silver price that's still fixed or controlled in some measure?
I think the initial steps are to force quantum jumps up.
Gotcha.
And that will open the gold mines again.
Thereby allowing
bring new supply in.
Right.
It'll also free up some supply from owners who say, well, we get to $2,500 gold or 3,000 gold. I'm going to sell 10% of my holdings because I got a lot of things that have been waiting.
Yeah.
I got kids who I want to send to college, or I want to expand my business, but I can't.
Right.
Not yet.
Right.
So the first few steps are going to be forced quantum jumps up to get the mines open, to get the market working more properly. And then I think later they're going to have some real efforts to allow full freedom in the market to try to achieve short-term and long-term equilibrium between supply and demand. But there's going to be some forcible movement from international contract to get to 8,000 to 12,000 on the gold price. And look for the ratio of gold and silver to move down to 30 and 40 into something more reasonable.
Right.
It's totally out of whack right now. You've got over 300 ounces of claims for every physical ounce of gold from paper contracts. 300 to 1 right now.
Wow. It's
absolutely absurd, untenable, and will not continue. So at first come the quantum jumps. Then we're going to have a lot of movement toward equilibrium. We have to test to see what comes out of existing hoards. Like, some guy who owns maybe 4,000 ounces of gold. How much is he going to sell if we get to 3,000? We don't know those answers yet.
Right.
You need the system to work its magic to achieve an equilibrium. But Jim Sinclair has done some excellent work looking at new dollar creation, new debt extension, and he says the fair price for gold has to be somewhere between $10,000 and $25,000 per ounce. So I think that's where we're moving. I think the 10,000 is a lower bound in that range. It's very easily defended. But when we get the gold currencies, that's when the banking system starts getting involved in the game.
Right.
The banking system, I believe, is secretly acquiring gold now.
The Western financial banking system?
Yes. And when they're ready, they're going to give a signal, and the Chinese are going to say to them, okay, we see your signal. We're going to double the gold and silver price in the next month. And who's going to be a beneficiary of that? The banks that bought.
Sure.
And that's one of the main ways that the banks are going to recapitalize themselves in the West. They're all absolutely in tatters right now.
Isn't that ironic, Jim? They're going to recapitalize themselves with their own Achilles heel.
Yeah, but they're going to lie through their teeth while they're doing it.
Of course they are. Yeah.
They're not going to want you to bid up the price of what they're resupplying at.
Right.
The irony is all over the place. So they're going to lie to you that gold is still a dead asset while they're buying.
Yep.
Now, we mentioned how the silver market is seeing a lot of accumulation right now. It could be not just China, but it could be some of the Western banks because they don't own much silver. They own a lot of gold.
Yeah.
The central bank, I should say, the central banks own gold. They own no silver. Industry requires almost no gold.
Right.
Industry requires a lot of silver. So silver wins on the supply side. Silver wins on the demand side. That's why I think the gains in silver are going to be triple the gains in gold.
Yep. As the ratio tightens. Yeah, absolutely.
Ratio. The voice thinks the ratio is going to move to 25-1.
Yeah. Well, it'd be something a little more.
400 gold, 10,000 silver. I'm sorry, 10,000 gold and 400 silver.
Yeah.
But, these are just numbers thrown out that could be way down the road after numerous steps and numerous battles and numerous dead bodies. Because these are actual wars where owners of gold and their lawyers are being murdered by the U.S. Department of Treasury.
Literally.
Yes. Asian owners and their lawyers.
Unbelievable.
And a truce was called about a year ago.
Jeez.
Because the U.S. side also had some victims. Last I checked, the Asians know how to shoot a rifle. Last I checked. And the enforcer, Will, is the triad. The Hong Kong Mafia. The enforcer on the U.S. side, it's the Bush family. That's where the killers are.
So this is the war taking place on a global stage right in front of us.
Yeah, it's in front of us, but it's not easily seen because usually it's so-and-so, reporter for San Francisco, died in a fiery car crash.
Right.
Okay, end of story.